So maybe you're an investor or trader and you're starting out. You want to learn how to invest and trade like successful traders. What are the things they do, their actions, and their habits. Today, I'm going to share with you the 5 habits of successful traders. If you would like to watch more content like this on how to invest and trade the right way, hit the like and subscribe button down below. With that, I hope you enjoyed the video and let's get straight to the 5 habits of successful traders. The first habit of successful traders is following the rule of 3. Instead of entering a trade with only one reason, such as an overbought or oversold condition, have at least 3 reasons that you can clearly articulate for entering your trade. Many traders, when they receive a signal from just one of their technical indicator, will straight away jump into a trade. The moment you have at least 3 reasons why you are entering the trade, you don't get into trades in and out, and you don't jump from trade to trade. You have at least 3 good and strong reasons why you are entering and making your trade. I call that reason-based trading. Note how I call it reason-based and not emotions-based trading. The moment you trade with at least 3 strong reasons, you go into the trade with more confidence, and even if the trade goes against you, you know you followed your own trading rules. So even if it may be a losing trade, it is still a good trade because you followed your trading rules. And as traders with an edge in the markets, we know that we may lose on a number of trades, but over a sample of trades, we will be profitable at the end. And I explained why this is so in one of my previous videos on trading psychology. So the moment you have 3 strong reasons to enter any of your positions in the market, you are internalizing your trading rules in your head. You're more likely to follow your trading rules, and if your trading system have an edge in the market, you will be profitable over a large enough sample of trades. So start following the rule of 3 and have at least 3 reasons why you're entering your position. So that's habit number 1. Habit number 2 is always keep your losses small. You don't have to be right 10 times out of 10, 9 out of 10, 8 out of 10, or even 6 out of 10. A trader can be right 3 or 4 times out of 10 and still be profitable. In other words, it is not the number of times you lose that matters. It is the amount or magnitude of your losses that matters. And the way to keep the magnitude of our losses low is to always keep our losses in each and every trade small. If you study the successful traders and you study these traders in detail, you'll notice that successful traders do have quite a number of losing trades. But they are still successful and profitable because they always keep their losses small, and when they just need 1 or 2 big wins to make all the money back and even more. So it is not so much about the number of losses that matters, because we can't control that aspect, and even with the most robust trading system, but it is the magnitude of our losses that we can control and which we should pay most attention to. That is habit number 2. Habit number 3. Know the general market trend and trade accordingly. You need to know each day what kind of market you are currently trading in. You don't want to short the market when it is an uptrend or buy when the market is on a downtrend. The general rule is that the type of market we are in will determine the type of trade you put on. There are 3 types of market trends: uptrend, downtrend, and consolidation or in the range. One way to determine the market trend is to use moving averages. I also cover moving averages in my video on technical analysis for beginners, and I won't get too much into detail here. But to determine an uptrend, we want the shorter term MA to be above the longer term MA, and we want our MA or moving average to be sloping up. For a downtrend, we want the longer term moving average to be above the shorter term moving average and our moving average to be sloping down. For consolidation or in the range, prices will trade between the price range, and in this type of trend, the moving averages tend not to give very clear signals. So after you have used the moving averages to determine the general market trend, the next thing you want to do is trade accordingly. The reason why we want to trade accordingly and with the trend is that individual stock prices tend to follow the overall market trend. So if the overall market trend is moving up, many stocks will also move up. And if the overall market trend is moving down, many stocks will also move down correspondingly. That is why we have the saying, a rising tide lifts all boats and a falling tide falls all boats. So habit number 3 is know the general market trend and trade accordingly. Habit number 2 is note down every trade you make. You can write it down in your notebook and make a spreadsheet on your computer, but make sure you note down every trade you make somewhere, be it writing it down in a notebook or typing it in a spreadsheet. When you note down the trades you make, instead of just internalizing the reasons why you're making the trade, you are also externalizing it by jotting it down into words rather than just thoughts. In this way, the habit of noting down every trade you make goes hand in hand with the first habit of following the rule of 3. After you have internalized at least 3 reasons why you are making the trade, you then note down in your notebook or spreadsheet. So after days, weeks, or months have passed, and when it comes the time to review your trades, you have this note stating the reasons why you entered the trade and your thought process behind it. In this way, you get to see the good points and flaws behind your past thought processes and how you can learn and be better from it. This is why you want to note down every trade you make so that you can continue to learn and grow from it. Now that we know the importance of externalizing our thought process, what are some of the things that we can include in our spreadsheet or notebook? Some things that you can include in your spreadsheet or notebook are the dates of each trade entry and exit, the size of the trade, the profit or loss, a running total of profits and losses, and a comment section where you describe as specifically as possible why you entered and exited the trade. Analyze these trades at the end of each month. Are you consistently losing with one kind of setup? Are your stops set too tight? Are your targets too far from your entries? Can you detail the rule of 3 for each trade? Use this journal to learn about your weaknesses as a trader and improve along the way. That is habit number 2. Habit number 1 is do not overtrade. One of the most common mistakes that novice traders make is making too many trades. They don't have a clear trading system and rules to follow, so they just trade in whatever stocks that happen to catch their eye and their fancy. And that is the reason why most of these novice traders are unprofitable in the markets. Not only do they enter into bad trades, but because they trade a lot more, they also incur higher commission fees. So on top of the losses from their trades, they also incur high commission fees for their frequency of trades. That is why we have the rule of 3 and why we note down every trade we make so that we only trade when we have strong reasons to do so and trade when we receive signals from our trading system and make trades that follow our trading rules. That is one way to avoid overtrading. These are 2 ways that you can avoid overtrading. The first is to set daily or weekly profit target, and when you hit it, stop trading. The second is, when you reach a certain amount of loss on the day or week, stop trading. If you want to cap the loss at 5% maximum each month, say on the second week of January, you're already 5% down. You want to stop trading. It might sound counterintuitive because some of you will say, but shouldn't we continue to trade so as to reduce our losses or turn our losses into gains? It is not recommended you do that because when you already hit your loss threshold, you tend to be more emotional at that point. And emotions will affect your trading, encouraging you to take unnecessary risks in the markets which can further compound your losses. There are many more habits of successful traders that I couldn't cover in this video. So if you want to know more about the habits of successful traders and find this helpful, make sure you comment below and hit the subscribe button because every week I upload videos on investing and trading. Make sure you do all that. See you in my other videos and until next time, to your financial success.